a groundbreaking practical complex waves count. Groundbreaking practical complex waves account. We are on a monthly chart of Merck and Co. Stock, Epic, Mike, Romeo, Kilo, MRK. This is an American stock listed on the Dow 30 index. All right, we're going to start a wave count. I've already done my homework here, but I need to remind traders that this was quite a bit complex wave count, as you will see here. Using our guidelines, very simple. I have seen that an Elliott wave cycle was completed here. Want to highlight it so you can see it on my chart for Merck stock. Because the most challenging part of the wave counts is to identify the first Elliott wave. So, in my view, from 1985 to 1994, we have an Elliott wave cycle, which I highlight here with the red lines on my chart. So, at the end of this Elliott wave cycle, all right, so the cycle that has started here, pay attention, has ended here. Looking at my chart. Hold on a second. I want to zoom into that session, because when you are, what I would say to try, when you are looking at the chart like this, you don't see everything clearly. All right, but when I zoom into it, you may see it a little bit. That it may make a bit sense to you, but I'm trying to zoom into. Okay, where we are. My chart is a bit erratic now. So here it is. Okay. Oops. Okay. Here it is. You see here, he was quite bullish, but there's a bit of pullback here. So, but you can agree with me that it was a trend here. Can you agree that this is a trend? This is not a correction in my view. From 85 to 1992, this is a trending phase followed by a correction here. All right, on this monthly chart. I would like to remind traders who would like to criticize my wave count, feel free to do so. But what I will say to you at this point in time, this is a primary, okay, the preliminary wave count. So here we have at the end of an Elliott wave cycle. So my first Elliott wave in this session here, okay, so from here to here, which are highlighted into green. Okay, let's zoom into that session because we have seen already this portion. So I want to zoom into where we are now so you can see clearly what's happening here. Okay, so this is my first wave, second wave, okay? So from here to here, that's my first wave, second wave, all right? My third Elliott wave is a complex third Elliott wave. Feel free to disagree here, and I will not complain because I find it quite challenging. You can see first minor wave of the third wave, second minor wave of the third wave. Pay attention to this session. I'm going to come back to that in a moment. Third minor wave of my third wave, and a fourth minor wave of the third wave, and a fifth minor wave of the third wave. So in fact, hold on please. From here all the way up here, this is the third Elliott wave, which has been subdivided into 5 waves. I want you to concentrate on this session, which is quite challenging. Okay, you can see that so we count first wave, second wave. Now we start counting the third wave, which has been subdivided into 5 waves. So we say first minor wave of the third wave. Now you can see that we did something here. So you see it pulled back first. I want you to understand it. So see it clearly here. So prior pullback here. You will see that sometime. It pulled back like this, okay? You agree? So you may be wondering, George, what are you talking about now? Okay, you silly boy. Okay, so now, and then it start going up, okay? So you see here, so we say first minor wave of the third wave, second minor wave of the third wave, and then here we are. It is the third minor wave of the third wave. No, it can't be, because it will violate, okay, the wave principle, because the third wave should not be the shortest wave. But what has happened here, you'll see this very often, my friend, you'll see this very often during the second wave. I found this few times, and whenever I see this, I consider it as a whole. It's like nothing has happened there. When you see the price here, so first minor wave, second minor wave. So at this point in time, if you understand what is taking place here, the price was trying to go up. Okay, it's trying to go up to form a proper third minor wave or the third wave. But for one reason or another, it couldn't. So this is a failure. This move here is a failure. You can see that the price went above the high of the first wave before coming back. But understand that this session here, are you with me, is a failure of the normal third area wave. So you will see that very often during the third area wave, during the second wave, when you have a correction that is formed like this, price went down, up, forming a higher low before pulling back like this. In fact, what you see here is a kind of a double bottom chart pattern. When I see like this, I'm counting wave. I understand what is taking place because, feel free, as I said to you, yeah, traders are right to criticize me here, which is all right. But my understanding is this, is that price was trying to go up, but for one reason it has failed, and then pull back again. When I see this like this, I just draw. If I'm drawing my second wave, I just go like this. I draw it through it. It's like there's a hole. For me, it's like this. Though the price form a new higher high before pulling back. But this move 1, 2, 3 is the second wave, which went above the high of the first wave. But this is just something strange that is happening. But if you understand the reality of the market, as the price pulled back like this, bullish traders were buying. But as the price going up, it couldn't go up as they were expecting, okay? And then it pulled back. But in normal condition, are you with me? In normal condition, the price could have gone up like this, okay, forming the normal third area wave. But this is what I call a failure. When I see like this, which you will see very often, remember, very often during the second wave, you may see something like that, and then trader usually you will get confused. Now, that's why I titled this video, Groundbreaking Practical Complex Wave Count. So when you see like this, okay, you may just draw the line like this, and then continue to draw it, continue to count your wave. So as I did now, if I'm wrong, I'll find out later, okay? You may find out later whether you are wrong. So I continue to count my wave. So I say, okay, I consider this as a whole. Remember what we do? We start with the preliminary wave count, and then we go to wave validation, and so on and so on, okay? So when I see it like that, I just say, okay, it looks to me like a whole. So I drew it like this. So first minor wave, second minor wave, third minor wave. So if you continue to count the wave, you may see that something will not add up. What do I mean? Either you are violating the wave theory, or a pattern, another pattern, will help you correct your mistake. Now, pay attention. So suppose you see this and you go blah, 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 you made a mistake here. When you reach this level, you see we have here what? A double retracement. This double retracement quickly confirmed to me that what I've done here is correct. All right, the double, because this is a multi-wave price going up. So we have an area wave cycle has ended here, and we have, okay, a multi-wave, a new cycle has begun. This is the trending phase. But this session here is what we call a double retracement of the flat correction. In fact, what I say to traders who do not learn to master the flat correction is that I feel sorry for you. This is not to insult traders, but seriously, I feel sorry for traders who do not master the flat correction, because we can use the flat correction when, okay, the economy news are released to forecast where the price is likely to go. And also, it's a powerful tool that we see very often on the 4-hour chart, on the 50-minute chart, and it's all over. And it's helped us in a wave count. So here, as I reach this level, I see that I have a double retracement, which is bringing into my mind a flat correction. So once I see this double retracement, I know that definitely my trending phase has ended here. No question about it. My my training phase has ended here. I know that because it's only after the training phase that we have the double retracement. 1, 2, 3, 1, 2, 3, followed by what? 1, 2, 3, 4, 5, the flat correction. So with this information that I have here, now I know if I was wrong here, I will find out straight away that, okay, this is the end of the fifth wave, all right, definitely the end of the fifth wave. So let's do it backward. So if you do it backward, you'll see that probably you are wrong. In fact, if you zoom into the chart, the fifth wave itself, which is from here to here, some trader will say, John, that's not correct, which is okay. And it's in fact subdivided into 5 waves. But on this monthly chart, it's not clear. But also because since 1999, if I switch to the weekly chart, you can only see the most recent data, talking about recent years. So I can't even go back to the weekly chart to zoom into this, fifth wave. But all I will say to traders is this, that this fifth wave is subdivided into 5. I know, because I see this pattern, see this candle here on the monthly chart, price went up to this point. You see this candle here, okay, the price went a little bit down all the way here. If you were, for instance, even on the daily chart, this session here, between these two candles, you see that the price did pull back. But because we are on a monthly chart, you cannot see it. In fact, this fifth wave is a complex fifth wave, which has also been subdivided into 5 waves. Looking at the shape of, you see, there was a shadow on top of this candle, followed by the tail for this candle. That's how I know quickly on the monthly chart, because I've seen this pattern before. So there was a pullback in this session, followed by, okay, this one, which is, okay. But now there is here we can say there is a violation. Here, how do you see? Can you see that there is a violation? Because the fourth wave is overlapping the first wave. But once again, let's stay on this one because it's quite complex, this wave count. Look carefully. Look, my friend. Now, this is what I'm trying to explain to you now. Let's remove this light because it's becoming very interesting. I'm getting excited. So, a lot of traders may say, George, now you see it, there was a violation. No, there was no violation. But on a monthly chart, if I draw, okay, that's what I'm saying to you, if I draw my first manual wave or the fifth wave up to the top of this tall candle, let's zoom into it. I want you to see that clearly. Oh, come back here. I'm talking about this candle here. So this is the low of that candle. That's the height of that candle. But that candle is 4-week candle. Can you understand? It's 4-week candles because we're on a monthly chart, okay? So, but that shadow that you see on top of that candle is not part of, the first wave. So therefore, if you're on a monthly chart, you put it like this, from here all the way to the top of the shadow, you will think that there was a violation of the wave principle because the fourth wave should not overlap the first wave. But if you were on a daily chart or weekly chart, you may be able to draw, okay, the wave carefully. You may be able to draw it and see clearly that, okay, in fact, this is the fifth wave. Another thing that is confirming to me that this is the fifth wave, which has been subdivided into 5 waves. Okay, let's remove that. It's too complicated for some traders. Is the flat correction. Let me show you something else. So when we are counting wave, it can become sometimes tricky, which means you are not sure because you don't have the information is not very clear. If it's not clear, what can you do? You're not going to invent it, yes or no? You're not going to invent it. You can only work with what you got, okay? So I can't go back now to the weekly chart because if I go to the weekly chart, I can't see the year 1999. I'm stuck with this information. But another thing that I can use here, because I know something else, is that the double retracement that I'm talking about here, This is, by the way, an expanded flat correction because we have the running flat correction, the classic flat correction, and the expanded flat correction. The expanded flat correction will go above the high of the fifth wave. And usually, okay, the expanded flat correction will go up to which level? 138.2% Fibonacci extension of the fifth wave. Now, you will probably know that some of Elliott wave traders will say to you that it will go up to 138.2% Fibonacci retracement level of the whole motive wave. It's also correct, but I'm aware of it, but I pay attention more to the, okay, to the 138% Fibonacci extension level of the fifth wave. Are you understanding what I'm trying to explain to you here? I'm trying to do something also on my chart that is quite, here it is. So here it is. This is the beginning of our multi-wave, yes or no, okay? Let's talk about it clearly. So generally, some trader will tell you that the expanded flat correction can go up to 138.2% Fibonacci extension level of the whole motive wave. So the motive wave from here to here, the 138.2% Fibonacci extension level of the whole motive wave is this line here at 11000. Okay, 138.2% Fibonacci extension level. If you want to learn and master the 138.2% Fibonacci extension level, go to www.dayprotraders.com or subscribe to Day Pro Traders YouTube channel. I'm aware of that, okay? What I prefer is to use, okay, the Fibonacci extension to the fifth wave itself. It worked for me better. As you can see here, let's do it one more time. If I apply the Fibonacci extension to the whole multi-wave, you can see that the 138.2% is quite far away from where, okay, the double retracement has ended. So this 138.2% Fibonacci extension level applied, okay, applied to the whole multi-wave. Now let's apply that Fibonacci extension only to the fifth wave. Where is the 138.2%? It's the red line here. You can see that that's where the expanded flat correction has stopped. So all the blah, blah, blah that I have been saying to you in French, in English, in German, all right, now you understand, okay, is that I prefer to apply the Fibonacci extension to the fifth wave instead of the whole multi-wave. This helped me a lot in my wave count. Why? Because like now you are seeing that I'm telling you about, okay, that the fifth wave in fact has been subdivided into 5 waves, which some traders may find a bit difficult to believe or to accept, all right? But by using, okay, the Fibonacci extension, I have another confirmation that definitely my fifth wave is this one here. It's not enough from here to here. It's not from here, it's from here. Why? Because when I apply the Fibonacci extension to that fifth wave, my 138.2% is the red line, and my expanded flat correction went exactly to stop there, confirming to me that the fifth wave is this one here. So you see that it's quite a groundbreaking, practical, complex wave count when it becomes a bit tricky. So this session, even the second manual wave of the third wave, we may say, well, what kind of second wave display a higher high? But in fact, it's a failure of a third Elliott wave. So for me, it's like a cancellation. Nothing has happened here. It's almost like nothing has happened. So I draw it like this, and then I count it. I say, okay, 1, 2, 3, 4, 5. So then let's say this one pull back. So I'm thinking, is my wave count correct? So far, everything adding correctly. I'm not violating any wave principle at all. All right, everything, my 5 manual wave for the third wave, everything is okay. The third wave is not the shortest wave. The fourth wave is not overlapping the first wave, and everything add up. Now, as I'm going along, I'm thinking, is this correct? Now, I have a flat correction here. So I know now, okay, this is the end of the fifth wave. Now, where is the beginning of my fifth wave? Now, by applying a Fibonacci extension to my fifth wave, I see that because I have a flat correction here, now I have a certainty that this is definitely my fifth wave. So at this point in time, I'm quite happy with my wave count. You see that this is quite complex. So the stock is marked. You can go to the monthly chart and try to count the wave from 1995, okay, to 2001, okay. You can use it as a homework and see that it's quite complex wave count, this one, and go along and try to without watching it. So you watch the video first, all right, and then now don't watch the video, and then you just open the chart for merck stock, and then you try to count the wave from somewhere at the end of 1994 up to the beginning of 2001, and see whether you can find all the waves that I'm talking about here. All right, this is groundbreaking, practical, complex wave count. So let's continue with our wave count because we haven't finished yet. Okay, I want you to show you everything. So we see an area wave cycle has ended here, another trending phase has begun here. Now we have a flat correction in this session. The flat correction, we know the internal waves of the flat correction: 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Now here we are. Can you see 1, 2, 3, 4, 5 down? So traders are asking a lot of questions, and they are counting wave on different charts, and sometimes they face some situation and they give up on the area wave, and they are saying, George, I can't make it, I can't do it, I don't know anything about this, and it's too complex for me. Now here we are. Can you see 5 waves down? Okay, let's start drawing lines. Okay, so suppose you have a little chart here. Say, okay, draw a line along the price. So see, okay, it went down. Okay, let's see. Let's start doing that. Okay, it went up. Okay, and then it went down. Okay, so the chart will say without line that it went up a little bit here, and then it went down. Okay, so 1, 2, 3, 4, 5. What a messy 1, 2, 3, 4, 5. Normally, it's never like this. You see, this is what we are talking about. The reality of the market and the theory. You see here, it's not like this. Okay, normally, this is a correction. So the waves can overlap each other. Okay, they can overlap each other, but not in this style. Okay, now I can explain to you what has happened here. Okay, you can see that we have the trending phase, then the flat correction has ended here. Look what has happened. We are in 2001. Okay, we are in 2001. Okay, and this is a MEC stock. Look how they were selling. So if we were counting wave here, we were expecting 5 move down. This will be, okay, I don't want to move in my vertical line. Okay, so if you were here in 2001 and we were expecting 5 move down, this move, I'm going to color it now into orange. All right, here it is. If we color this into orange, you are here. So this will be your first wave. All right, so of the correction. So we have 1, 2, 3, 1, 2, 3. So this will be 1, and then you'll be expecting 2, and then 1, 2, 3, 4, 5. Okay, you'll be expecting 1, 2, 3, 4, 5 down. So this will be 1. Yes or no? Because it went down straight. But look how far it went down. All right, see how they sell it. They just sell it, boom, 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 down. Now stay tuned. All right, now the reason why I'm smiling is that this is the reality of the market. Okay, so traders were quite bearish, and they don't care about area wave or anything else anymore. They were just selling it. They are just selling it. Everybody was just selling it all the way down. Now, what I'm going to do at this point in time, when you see something like this, so you see this is normally it shouldn't go down. This is the first move, shouldn't be like this, it shouldn't go all the way down. So what I will do, I will use Fibonacci retracement to the whole multi-wave, not to the top of the flat correction for the multi-wave, because we want to see how far the correction went down in comparison to the trend. So we apply Fibonacci retracement to the trending phase. We want to see how far, okay, the first part of that correction went down. It went down, my friend. Have I done it correctly? Let me do it properly, okay? 1 second, please. All right. So price went up. Start drawing Fibonacci extension. I have two lines here. There's another one. What is the other one? Okay, I want to remove. Okay, the other Fibonacci line. And this is my fifth wave. I'm going to color it into red. All right. Stay with me, please. Stay with me. Okay. Now, what I'm trying to do is to apply Fibonacci extensions to the trending first. You agree? All right. So we want to see how far the first part of the 1, 2, 3, 4, 5 went down. Look, 61.8%. Okay, it went down. Even though the thing started here, it went down 61.8% of the previous trend. So normally what we see for the expanded flat correction is something like this. One, gently, okay? Something like that. And then you see, okay, two, the wave can overlap in this case because it's a flat correction. And then you come down gently, gently, like this. Not the first move of that 1, 2, 3, 4, 5 going all the way to 61.8% of the trend. So now, are you with me? Are you getting what I'm trying to explain to you now? Okay. So this move here. Hold on. Let me remove some of my lines. Okay. And what I'm trying to say to you is that the first part of the 1, 2, 3, 4, 5, which is this one, it went too far. Okay. You see, 61.8% of the previous trend. We may think that is because normally bullish traders are here, they place order here to buy, expecting a new trend to begin at 61.8% Fibonacci retracement level. Here it is come down all the way, but because we know that after the flat correction, we should have 5 waves down. But here it is the first part of that 5 waves. It just brought the price straight away down to 61.8%. So what is going through the mind of traders? All right, they want to buy here. So why? That's what I'm saying to you. Combine Fibonacci and area wave. There are orders always here after the trending first and the correction begins. Aggressive trader will place order here to buy. So price start going up here, they bought it here. Okay, after the first move, but the area wave traders know that it should go down in 5 ways. So there is a fight going on. But the bearish trader were quite aggressive here. They sold it big time. If I see this like this, I won't even be part of the rest because I know that it went down too far. This is the reality of the market. All right, so here, instead of having a normal 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5 down, look, the first part went down too far. What can we expect? The game is almost over. So there was a bit of fight here, so to speak, because as the price reached the sweet spot zone, as the professional call it, sweet spot zone, between the 50% and 61.8%, they were already placed here before the price even get here. So it went boom, 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 here to the sweet spot. Swing traders took it. Price, they think that, okay, a new trend will begin. But area wave trader want their 5 waves. All right? You understand? The area wave trader want 5 waves. Probably the market environment and the fundamental were not solid for MEX stock. So here, they force it back down. The area wave traders want to sell. All right? They want to sell. They see 1, 2. All right. Now those who are fundamental traders who are buying always at 50% or between the 50% and 61.8% get caught. They think that is finished. So earlier we traders say we want our 5 waves, so they sold it down. As the price come back down to the sweet spot zone, well, the bullish traders are buying again. You see, that's why we have this funny shape here. You see here, as it come back down, the bullish trader want to buy again. All right, so now you understand why we have this funny 1, 2, 3, 4, 5. It's a strange, 1, 2, 3, 4, 5. Now you understand why there is this kind of not a distortion, this price pattern here. All right, so let's continue with our wave count. We haven't finished yet. All right, so we started the wave count. We see the area wave cycle. We see the multi-wave. Now we see a double retracement. A flat correction is underway, which has a bit of strange form. All right. Now we understand why it is like this. Now, what is this move here? Okay. What is this one? So, multi-wave, flat correction. So the flat correction has started here and has ended here. Now, discount this one because it's a double bottom. You see that very often. The crowd like to, the market like that. So you know that, okay, flat correction has ended here. They want to retest this point again to validate this level as a support level. So this price action here, don't worry about it. It's just something the market do care about. They want to validate that level. For the first time the price return to this level, it's trying to go up. They want to retest it. Okay, so this move, this double bottom here, is okay. Okay, it's not part of the wave count here. It's normal. Okay, so now, so we have 1, 2, 3, 4, 5. Okay, third wave, complex third area wave, a double retracement. Okay, and then 1, 2, 3, 4, 5 is strange one. Prior retesting the key level. What is this move here? This is what we call X. X. All right. The X wave is a failure of a trending phase. It's a trend that has failed. The area wave traders who have continued wave know that the trending phase has ended here, that the flat correlation has ended here. They understood that the price formed a double bottom chart pattern here, and they want to buy. They're expecting a new cycle or a new trend to begin here. As the trend has started, okay, for one reason or another, the trend has failed. Which year? Between 2007 and 2008. Unless you are a baby, you know, you are a baby trader, so to speak, you know what has happened in 2007 and 2008. We have the financial crisis, okay, and the real estate crisis in the United States, and the global stock market was bearish. So Merck stock was starting a trending phase here when the global market became bearish. Therefore, all right, therefore, Polish traders, the trend has failed. So in the language of the area wave, we call that wave X. When you see the wave X, you will expect what? A complex correction. In normal correction, now it's late in London now, so you understand. So in normal conditions, my friend, when we have, okay, a flat correction, okay, and X, we expect another correction, okay, similar correction like this to take place after the failure of the trading phase. So we will see a flat correction, X. Probably we will expect another flat correction here, or another type of correction. Look carefully, my friend. After the X, the previous correction, we are likely to see exactly, okay, the previous correction, or at least another correction after the X, which is the failure of a trending phase. This is a trending phase that a failure of a trending phase that we call wave X. So look carefully, my friend. You see how the price went down in this session? See how it went down? Boom, 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 down. You see? Can you see? Remember that, okay? So you see how it went down? After the X, the market was expecting similar move down. So you see how they sell it again? Down, 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 down. All right? Followed by this. So what they were trying to do, what the market was trying to do, is to duplicate this price action. Which one? The 1, 2, 3, 4, 5, this session here. They want to copy this session and paste it here. All right, so what we will do, we'll measure, hold on please. What the area wave traders are trying to do with Merck during that time, you see, we have the 1, 2, 3, 4, 5, a strange form. They want to copy that and paste it right here. Now we are going to what we call fractal pattern, a pattern that copies itself from one period to another period. So after the X, they're expecting another move. Wow, you see how this one went down? Very, very fast, which is this one here, all right? You see this session here? This session here is this one here, all right? So I'm going to color this one now into, which color should I use now? Oh, Let's use green. Yes, you see this one green. I'll color it also into green so you can see the similarity between the two patterns. All right, you can see that this is quite complex. Yes or no? It's complex, all right. But this is what you will do if you want to count wave. All right. You see how the price went down fast in this session is similar to the way they sold it here. And it went up like this, and the same thing was happening here. What the market was trying to do is to copy and paste exactly that, this pattern here, this session here, down, 1, 2, 3, down. So what the market was expecting is to bring it, okay, down like this, and then like this, up, and then, okay, push it down. That's where MEC was going, repeating exactly the same pattern, 1, 2, 3, 4, 5. After the X, we're expecting the same correction after the X, 1, 2, 3, 4, 5. But something has changed, or in fact, MEC stock was lucky. Why? Remember what I said to you before, that when we are trading first the market. So here in 2009, the stock market, the S&P 500, became very, very bullish. In fact, the S&P 500, the Dow Jones, all right, the FTSE 100, all the major stock index, okay, have started a new trend in 2000, at the beginning of 2009. You see? So, though the area wave traders were trying after the X, they were trying to copy and paste the 1, 2, 3, 4, 5 in this session for MEC, but MEC has survived the bearish pressure because the market itself became bullish. You can see that it went up, they started selling it down, but it survived and ran away. All right, you see now? So this is a complex correction, a flat correction. X, market was expecting the same pattern, or at least a move down more, but due to the global market that becoming a little bit bullish from 2009, it has a positive effect on MEC stock. So what can we expect at this point in time? Is it trending now? Looks like it, but it's at a resistance zone. This is where the X stopped before. You see that this X wave is a failure of a trend. So, what you need to understand when you are counting wave and you see the wave X, very, very important. What is the wave X? It's starting from here. What you need to do is to draw a line at the beginning of the wave X. Why do you need to do that? That's a very good question. Very, very good question. You need to do that because the market participants are willing to buy this stock at which price? At $27.29. Call it $28. Okay, they want to buy in that zone. $28. They want to buy. They were happy to buy because we have an annual wave cycle, a flat correction that has ended at that price, $28 in that zone. But as they were buying here, for one reason or another, the global market became bearish from 2007 to 2008. So the trending first has fell. That's why we have wave X. Price pulled back to the same zone in 2009. Remember, we knew that this was a what? The beginning of wave X. You need to note down that price because it's a very good price. They want to buy at that price. A trend was about to begin at that price, $28. But that trend has failed. We need to remember that price. Price went down to the same level. Now the stock market is now favorable for MEC. Same price, I will buy and hold. Here it is. Market itself is now bullish. S&P 500 bullish, major stock index bullish. Now MEC, professional traders, remember this price, $28. Whenever I see wave X, remember the beginning of wave X. I'm not saying to you to go and buy any stock anyhow because of wave X. You need to check the fundamentals, okay? Perform at least Google acid test, check the competition, the market share. That will help you to make a better decision. I'm not here to tell traders to buy or sell any financial instrument. This video is for educational purposes only. But the point I'm making here is that it's important to know where the wave is, the origin of the wave is, because the market was happy to buy the stock at that price. Price return back to that price, fundamental solid, market environment suitable. Okay, it's up to investor to make their own decisions. Okay, that's what I'm saying here. All right, so here now the price start going up. Now we are again at the point where the wave S has failed. So you want to know the origin and the end of the wave S. So those are two levels. You need to draw them like this. Here we are. So before the price even reach this level, professionals know that they need to watch this level, because a trending phase has started here but has ended here. Now we are again back at the square one here again. So why the price again stuck here? If you look at the S&P 500, the Dow Jones, and you look at the market leaders in 2016, as I'm recording this video today, all right, you can see clearly that the stock market has peaked. So it's not helping Merck very much, all right? Though the stock want to go up, the stock market has peaked again at the point where Merck is trying to break this resistance here. So if the stock market again start going down, it will not help Merck very much. So that will delay this trend again for Merck. In that condition, if the stock market start going down, what will go to the mind of traders? They will expect Merck to go back again to the level of $28, the level where they buy. Hopefully, I don't know why Merck did not go up as other stock, because the market was going up from 2009 up to this point, but Merck did not go up very much. This is what we are talking about. You want to check the fundamentals, so probably you want to check the fundamental, you want to check the competition, you want to check the market share, you want to perform at least Google Asset test, perform at least a kind of fundamental analysis, check the management and see, do they change their management recently, what's going on, why the stock did not go up from 2009 very much as, other stocks, were going up, all right? So this is the question that we want to ask at this point in time, because the market environment was favorable for Merck, but it didn't go up very much. Is he overbought here, all right? Or is anything holding this stock, to form a proper, trending phase? Because this doesn't look clearly as a proper trending phase that we will expect like this one here, okay? All right, so now this is the end of this groundbreaking, practical but complex wave count. All right. Once again, if you disagree with our wave count, put your comment below. You have any suggestion, put it below. All right. You have any specific question, put it below. And in due course, I will record another video, to answer your specific question. This is a groundbreaking, practical, complex wave count. We are the TSTW24 traders talking about groundbreaking, practical, complex wave count. In this case, we were analyzing Merck & Co., a stock on a monthly chart. Until the next time, enjoy yourself and be very happy. Happy trading to you all, and speak to you soon.